Welcome to the night where we light up the spark. We're trading crypto, finance, you'll be mad on the charts. Hosted by the one, Lunar Beaches top shark. Dive deep into the numbers cause this ain't no lark. We're crunching all the data, making money moves fast. From Wall Street to the blockchain, making predictions last. Community together in this financial blast. Markets after dark, that shatter ceilings made of glass. Mad on the charts with Lunar's bright lights. Crypto markets soaring through the night. Follow the trend, see future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you to the mother lode. Economic loops and the way the dollar flows. Community vibes where everybody grows. Analyzing trends while the world lays low. Markets after dark were only brilliant shows. Hit that subscribe and join the ride. In the world of finance where fortunes collide. Lunar's path will be your guide. Through the market storm or the market tide.
Good evening, good evening, good evening, and welcome to Markets After Dark, where we go mad on the charts. Thank you all for being here. It is Sunday night, January 6th. Wait, it's not January 6th, it's January 5th. Well, it's January 6th in the charts, so y'all know how we do it here. It's mad, it's crazy. We're already on to the next day, okay? That's what we do around here. But Monday, that means it's Macro Monday, so we're going to go over a lot of macro stuff. We're going to look at the week ahead, see what we have going on. Lots and lots of economic data coming out this week that pretty sure will have some impact on the markets. We'll have to see what exactly that entails, but I am urging caution because of what the charts are showing me right now. Let's just be careful. Let's not get ahead of ourselves. We may start the week off bullish, but that could just be a fake out. But we'll get into that. But let's go ahead and say hello to the chat. LBC is all I need. What is going on? All set. How are you doing? Robert Mulligan. Hello, hello. Good evening to you. Mad. What a way to start the week. Good evening, everybody. Good evening to you. Robert Mulligan. Evening chat, maybe a band-aid. Low volume, can't hear you. Hello, 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 hello. Hello? I mean, you should be able to hear me pretty good. Pretty good. Hello? Okay, I didn't hear you said, could you repeat all that, please? I said, welcome to Markets After Dark, where we go mad on the charts. Sir, we wear the Oilers logo today? No, we don't. No, we don't. Hey, what's going on, Retro Mike Tech? Guess what we did today? Titans lost. And the Pats won, which means we get the #1 overall pick. Which means we were the worst team in the league this year. But hey, we get the #1 overall pick. It's too bad it's not a very QB heavy draft, unfortunately. But I don't know. Maybe we'll stick with Levis and see how that all pans out. But yes, we are #1, numero uno, at being last place. We're #1 at sucking this year. We will trade the pick and blow it. I mean, I've already told a friend that earlier today. I said, I said we'll probably end up trading the pick away, but we'll see. What the Turkey Hawks do? Who's the Turkey Hawks? Is that the Seahawks? Turkey Hawks? Seahawks? Falcons? I guess you mean Falcons? I don't know. Melissa, what's going on, Melissa? How are you doing? Hope you are doing well. Is the stream okay? Stream good? We've had a rough couple of streams the past couple of nights. So let me know how the stream is looking. If this one ends up being if this one ends up having a lot of trouble, I'll probably have to switch the 1080p back to the 720 camera until I can upgrade the CPU and it can process all of this power. But yeah. Anyways, let's go ahead and get into the charts, because I know that's why you're all here anyway. Let's go look at the charts. Don't forget, guys, you can sign up for Blowfin under our affiliate link in the description down below. I use Blowfin every single day. I'm in a trade right now, actually. I really wish my computer or my internet didn't suck, or well, my computer. I wish my computer didn't suck, so I could just pull it up. But currently in a trade, up 5%. I mean, nothing biggie, nothing big, just a little 5%er for now. Got in at 98,675. Looking to come up to this daily fair value gap that we have right here. And that's what I'll be watching this week, is that daily fair value gap. See if we get into that and see what we do if we do get into that. I'm thinking that we will get up there. It's a wait and see kind of thing. But if we move down to the smaller time frames, we can see that we've broken this resistance here, if we are to consider this a resistance, because we could have considered this resistance, we broke it, considered this resistance, we broke that, and now we are looking to break this high right here at about 99,916. So break that high. I think we can do it. I think we might do that overnight during the Asia and London sessions, and then we could see that move up later into Monday. Sometimes, a lot of the times, Monday is the false move. So we've got to be mindful of that. We've got economic data coming in on Tuesday. We've got economic data on Monday too, but if we go over to Tuesday, that's where like the main stuff comes on. We've got Fed barking speaking on Tuesday. We also have balance of trade on Tuesday, exports, imports, all this good jazz. But we have JOLTS job openings, which comes out at 9 a.m. That is Eastern Standard Time. So I think this stays in my, is this in my time zone? No, this is my time zone. So this is going to be 10 a.m. Eastern Standard Time. So we want to watch this. We want to see the job openings, see if they come in higher. If they come in higher, that suggests that there's been some layoffs, because that means there's job openings for people to get jobs. But that also means that the labor market is kind of, well, I guess it kind of depends. Is there so much work needed that we need more people to fill the jobs, or are we losing jobs and that's why we have so many open jobs? I mean, they're not really openings. I guess that would mean that they are creating jobs if they're openings. So job openings refer to all positions that are open, not filled, on the last business day of the month. Job openings are part of the job openings and labor turnover survey, JOLTS The survey collects data from around 16,400 non-farm establishments, including retailers and manufacturers, as well as federal, state, and local government entities in the 50 states and the District of Columbia. The JOLTS assesses the unmet demand for labor in the U.S. labor market and gained attention in 2014 as favorite labor market indicator of Federal Reserve Chair Janet Yellen. Hit the laugh button. Why we laughing? Yay, a full week at least. We have no holidays. It's a full week. Yeah, we're gonna get a full week. We're back on track, guys. We're back on track. So yeah, these are all the positions that are open on the last business day of the month. So we really want to see jobs being filled. Coming in under this might be a little better than coming in over it. Then on Wednesday, we have the FOMC minutes, I believe. Is it here? Yep, we have the FOMC minutes on Wednesday. We also have the ADP employment change. So this is the National Employment Report that measures levels of non-farm private employment. The report is based on the actual payroll data from about 25 million employees and is produced by the ADP Research Institute in collaboration with the Standard Digital Economy Lab. They give you a little hyperlink over here for a source. We can come over here and pull that up. This is for your ADP. If it wants to load. Hello. Do you have a YouTube channel? Who are you talking to? Hey, I had to redo my YouTube last night and had to rebuild everything last night. It took me 3 hours to get it to work. I am now not branded. I might get a membership now. Sweet, R.S. Miller. I didn't know you had a YouTube. Put it in the chat. So change in U.S. in private employment in November of 2024, 146,000 jobs. While overall economic growth for the month was healthy, industry performance was mixed. Manufacturing was weakest we've seen since spring. Financial services and leisure and hospitality were also soft. This is per Chief Economist Neela Richardson at the ADP. Change in private employment. We can see it kind of softening in here, how it's just kind of, it's not really shooting too far up to the upside. In fact, it's kind of like, it's almost like it's curving a little bit towards the downside. So not what we want to see. We want to see a strong labor market. So when it comes to the ADP employment change, we would prefer for people to be keeping their jobs. We don't want to see people losing their jobs. We want a strong labor market. The weaker it gets, it's not good. It's not good news. I've also saw the yields just continue to climb. It's we're in weird times, but I'm going to be going into something with that too. I'm going to be going into the Dow Jones and starting the history on the Dow Jones, looking at the history of the Dow compared to Bitcoin. And I want you guys to tell me if you think that Bitcoin actually follows a 4-year cycle or not after I go over this. Just comparing the Dow Jones to Bitcoin. It's just one data set in a few that I have that says no to the 4-year cycle for Bitcoin. But we'll get into that. Non-farm payrolls. So this is going to be on Friday. This is something to watch as well. It's a busy economic data week. Non-farm payrolls is an employment report released monthly, usually on the first Friday of every month, and heavily affects the U.S. dollar, the bond market, and the stock market. Current employment statistics program from the U.S. Department of Labor Bureau of Labor Statistics surveys about 141,000 businesses and government agencies, representing approximately 486,000 individual work sites, in order to provide detailed industry data on employment, hours, and earnings of workers on non-farm payrolls. So again, we don't want to see this come in under. We want to see this coming over. It's all related to my business. One day, boring AF. It says I have, wait, what are y'all talking about? I have a blank channel, branded for life. Ah, I gotcha. I thought you had a channel. I hate that to go unbranded, you have to delete every video. I don't even know what that means. Actually, I think, oh, because, okay. All right. So yeah, again, we want to see a strong labor market because the Fed wants to see a strong labor market in order for them to continue to cut. Now, we are only pricing in 2 rate cuts for the year. That's what they were saying last meeting. We'll get to see in the Fed minutes this week coming out 2 p.m., I believe, on Wednesday. So we want to be paying attention. We want to be looking into the FOMC minutes. If you don't know what that is, it's essentially just like the transcript of the last FOMC. It's essentially what every Fed member was talking about within the meeting, so that you can kind of pick their brains and see their thinking on what could be coming down the pike, at least from there, as it pertains to their decision making. So we want to see. Good evening, Army Piper in the house. Wednesday, it's supposed to start. Oh, the snow? Is it snowing? Yeah. Man, I got. It's gonna be a fun week at work. I go. Yeah, it's gonna be a fun week at work. Yo, Ada Ace in the house. What is going on? Thank you all for being here. I appreciate each and every single one of you. So yeah, let's go back over to the Bitcoin. I am watching this daily fair value gap to the upside. I am currently in a trade. Let's go ahead and I showed you guys a little bit of that, but this is the trade. I shared this in the Piper Academy Discord. Make sure you go into the description down below and join the Piper Academy. While you're there, don't forget to check out, we have a thing for NordVPN, 74% off for like 15 months or something. I don't know. Just click on it and check it out, but it's 74% off. So killer deal for NordVPN. Check that out. All right, so yeah, this is the trade that I entered a few hours ago. Shared this in the Piper Academy Discord. I was wanting to add to it, but didn't get the chance. Had a lot going on. My oldest is turning Sweet 16 this week, and she came home to a brand new car, or not a brand new car, but it came home to a new car, to her car. So had a lot going on. Of course, she seemed a little ungrateful. I know she can hear me. So she can. She needs to watch out. Silver City should get some. Silver City. Man, I wish I still lived in the Southwest. 5 degrees here. Ooh. Yeah, no thank you. No thank you. So yeah, you can see kind of my thought process on this trade. I've already entered the trade, so we broke out of the, good job, LBC, thank you. New to her car, yeah. We can see that we have this consolidation range and then a clean breakout now. It's currently breaking out even more, and we have this high up here, so I have a take profit alert set there. We also have an order block right here, so I've got another take profit set there, this high right here, another take profit there, and then we have a order block up here inside the daily fair value gap that I could see us getting up above. I've got my last alert sitting here at the midpoint of the daily fair value gap. If we are to get into it, then that is where I would look to probably get out. Depending on how strong the trend is, I'll probably get out right there, especially if we start putting in some bearish divergences here on the lower time frames, and then we could see what happens to Bitcoin later in the week. Now, this is kind of what I'm looking like right now, or looking at right now for Bitcoin. If I just zoom out real quick, this is my big picture for the short term. It's not what anybody wants to see, but it is what it is. If we can get above this daily fair value gap, then I think we could see more upside. However, if we do get rejected up here and start losing some key support levels like this low here, all these lows down in here, then I could see us breaking down and then heading down to this spike in volume down here at the 702 Fibonacci retracement at $77,151. Now, we don't have to go all the way down there, but that is where I am looking at for a low-end target on Bitcoin if we are to lose this support down here. So, hopefully not. But if we go over to the Dixie, we can see getting a little bit of a pullback. But if we zoom out even more, that pullback might be short-lived. I was looking at this earlier today, and this is what got me looking at the Dixie again. But this just looks super bullish to me. The Dixie just looks super bullish to me. It looks like it's just been consolidate, break, consolidate, break, consolidate, break. I mean, it would be pretty crazy for the Dixie to break out, but not out of the question. Not out of the question. But what I want to go over with this whole Dixie thing, or with the Dow Jones, is this. All right, so let's go ahead and get into it. Golly, let's go ahead and change this to a line. Sorry. What are you guys talking about over here? Let's bring up the chat. Let's bring the chat up here. Where are we at, chat? There we are. What are you talking about? Let's see. Some Walmart shoes could be a good gift swap. Every 16-year-old girl wants a WRX. I don't even know what a WRX is, but she wants a truck, which is fine. What up, team? What up, Trent Brock? How you doing? Jay Violet, how you doing? How you doing? Hope y'all doing well. North KC Retro, it's 11 and feels like -4 in North Missouri. Ooh. My wife just came back from Missouri. She was in Missouri this weekend in Branson, Missouri. Good old Missouri. That's how we say it in the South, Missouri. Let's bring up Bitcoin on, let's see, this is index, new price scale, and let's do the Dixie. Let's bring the Dixie up. Yep, I don't need volume. I just need the history. Let's put these all on log, make sure everything's on log. All right, all right. So, can we see bullish price action while the Dixie is bullish? Absolutely. As you can see, this entire secular bull market, actually, let me color code these so I know what we're looking at here. This is Bitcoin. Let's make it orange. Dow Jones, I like to keep in blue. And then the Dixie, we're going to make it green for the greenbacks. Greenbacks. There we go. All right. So we can see right here, 2009. Right here. So this is right down here. Right here. This right here is the birth of Bitcoin. Now the price chart doesn't start until here because Bitcoin wasn't sold for pizza until around here. But something like that. So I'm told. Or sold for real dollars, whatever it is. But started being mined right in here at the very bottom of the 2009 bear market, 2008 bear market. It bottomed in February 2009. That's the Dow Jones. If I bring up the SPX and the if I bring up the SPX and the NASDAQ, they're going to look very similar. I like the Dow Jones because it's manufacturing, it's industry. Did you talk about the job numbers and stuff earlier in the show? If you did, I'll go back and look at it. Just wanted to check in. Yes, I did. Just a little bit, talked about a little bit, and their potential impacts on the market. Just depends on if the labor is looking soft, continuing to look soft, then we'll probably see more than likely, which I think is already expected, is a pause at the FOMC later this month. Now, we see the bottom in here. Sorry. We see the bottom in here. We see, right. Sorry. I was chewing on ice. Shouldn't have done that. All right, so we see Bitcoin come up here. This is its first major top here in 2011 after this massive move here. We can see at the same time that the Dow Jones, or around the same time that the Dow Jones put in a top right here. Let me bring up my highlighter. So Dow Jones puts in a top here. Bitcoin puts in a top shortly after. Then we see the Dow Jones put in a low, and then we see Bitcoin put in a low shortly after. Then Bitcoin does not break out into a new all-time high until after the Dow Jones breaks out into a new all-time high. Remember that. Dow Jones goes pumping into the sky. Let's go ahead and get rid of the Dixie for now. I just wanted to show that the Dixie, they can all go up at the same time. This entire time, the Dixie has been going up as well. So the dollar has been getting stronger even as the stock market has been in a bull market. So that's because you have a lot of people that you see a lot of demand in the dollar so that they can buy the dollar or borrow the dollar and then go and put it in assets that appreciate against the dollar to then go around, turn around, and sell it, pay for the interest on the borrowing, but then make the difference, right? So that is what I wanted to show on the Dixie, is that the entire time it's been going up is when we've also been in a bull market. So not always exactly inverse correlated. Now let's come up here. So we do get a peak here on the Dow, actually a peak here on the Dow. Then we get a little miniature correction right here. So we can kind of see this little miniature correction, and then it continues higher. We see a little bit of a topping at about around the exact same time. So right there, we see a little bit of a top. This gets a pull back, but the Dow Jones continues to move to the upside, and then they both bottom right around the same time, around here. So somewhere in September, late September, August, September 2015, and then they both start moving to the upside. Now Bitcoin, or rather the Dow Jones, here's its high, right? So it breaks its all-time high right here. Bitcoin does not break its all-time high until after the Dixie goes. Then they both move to the upside. Come over here, what do we see? Peaks at the exact same time. Again, peaks at the exact same time, and again, bottoms at the exact same time. We see the Dixie go for a new high, the Bitcoin fails, and then they both crash on the COVID crash. Then we come to 2021 and we get another top at the exact same time. And then of course, In 2022, we get the bottom first for the Dow Jones, then Bitcoin puts in the bottom some few months later. The point is, Bitcoin is very heavily tied to the macro environment. I can come in here and I can throw on the SPX with it. Put this on log. There we go. And like I said, it's going to be it's going to closely resemble the Dow Jones and the same as the NASDAQ. We can go ahead and throw that on here. Throw that on log. All about the same. So you can just essentially see that, I mean, they all kind of peak around the exact same time. They all kind of bottom out at around the same time. Peak. But see, this one actually, but all of these, the indexes continue to move to the upside, even as Bitcoin is moving to the downside, but they still bottom out at the same time. Bottom out at the same time. Bitcoin just struggles a little more because of the lack of liquidity compared to the stock market. I mean, everybody around the world, everybody in the world, not everybody, but most of the people that are in finance, they've been doing this whole finance thing and these indexes for quite some time. But so we can see clearly, is it really a Bitcoin for your cycle, or is it more closely tied to the stock market and just broader macroeconomic conditions? So you tell me, what do you guys think? Let's see. Let's go to live chat. Any day now. Thank you. How do I do? Can I not? Oh, that's because okay, hold on. I know what to do. Let's go over here. And let's do this. Start a poll. Do you believe Bitcoin follows its own 4-year cycle, or the stock market? Let's do that one. Or the stock market. Its own cycle. Stock market. So the question is really, do you think that no matter what, Bitcoin is going to follow this 4-year cycle? Or let's say if the stock market is to go into like a 3 years, 4 years secular bear market, is Bitcoin going to continue to do its 4-year cycles, or is it going to be stuck just like stock market? So let's go ahead and look at this. So this was the 2000s. We can see this is the NASDAQ, the dot-com bubble that popped, and Bitcoin was born here at the very bottom of the bear market. So of the secular bear market for the stock market, option C, Bitcoin follows the presidential election cycle. I think that has more, I think that lines up more with the stock market and the macroeconomic conditions, because that has to do with your monetary policy, who you elect into Congress, and all of that stuff. So I think that plays a lot into it. I think it's more just election cycles and monetary policy cycles. We can go ahead and add another thing in here, one more thing. let's go ahead and add the Fed funds rate. Fed funds, Fed funds, Fed funds. Add the Fed funds rate. And I'm going to get rid of the QQQ and the SPX because we don't need all of that. We've got the Dow Jones. So look at where we are historically when it comes to our Fed funds rate. Historically speaking, we did exactly what we did in 2007. This is where we started cutting. This is where we were when we started cutting. We can see where we were peaking out in here. The only thing is, one of the differences here is that this has already seen some nice corrections, whereas this right here was a double bottom, and that's an equal low. So once it puts in that equal low, I'm automatically thinking we're going to come back down and sweep that at some point in history. But that doesn't come until after they start cutting rates. And you can see cut, 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 cut. So they're cutting rates all the way down here. But the entire time that they're cutting, the stock market is pushing to the downside. So we want to be cautious because we're right around that point where, we start getting more cuts, and that could be the end of the cycle. That's why I think a pause is actually good for us, and that we can see continuation off of a pause, because if we get another cut, that could potentially lead us to more downside as people start to favor the dollar more than assets, because to borrow the dollar is becoming cheaper. But then again, they could just borrow the dollar and to throw it into these assets. And we could start seeing even more upside on the assets. The only thing that they need to do is not print more money. Okay? Just don't print more money, but we know they're going to do it because what happens? So we borrow money, then we go and we put it in the stock market. Okay, the stock market goes up. We take money out, and then we go buy more stuff. What does that do? Increases demand, supply shrinks, inflation up. Maybe. But I'm also hearing that we have an abundance of supply, that our industry or a lot of retail is kind of overstocked, and there's not enough demand. So I don't know. It's kind of we're in such a weird spot with the economy. It's just, I don't know. I think we've got some stuff going on. All right, I got a dip. Y'all be good and come mint some more HODL passes from Hydro Drip. Shout out to Ada Ace. Check him out. We've got a link in the description down below to his channel. Go and check him out. Great friend of the channel. Go and check out the Friday morning market report. Also, he's on there, goes over Hydro Drip and all that stuff. I also had him right here on Mad for a whole hour and a half. So go check that out as well. Auto overstocked, real stores understocked. Well, I saw something. It might not have been retail that was overstocked. I think it had something to do with material, but I'll have to look into that later. Let's see, what else do we got? All right, so we've got to be cautious with that. That's just basically all that I'm like shouting at the rooftops right now is just caution. Caution, 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 caution. All right, let's close that. So hopefully you guys were able to take something useful from all of that. Close tab. Close without saving. All right. So the dollar is looking kind of strong. It has broken out of whether we are looking at this downwards trending, resistance here, turning that into support, or this flat resistance here, turning that into support. Either one, we have broken above both and consolidated on top of both, so I would expect more upside and potentially a stronger dollar. Now, oddly enough, believe it or not, whereas this is the bottom of the 2008 financial crisis, at least for the Dixie. Obama gets elected, it gets a bounce, kind of chops around, and then in 2014 it shoots up, and then when Donald Trump becomes elected, it goes sideways during his entire presidency. Then we break out. December 2021, May of 2022. Essentially, that's about where we bottomed. We bottomed in November of 2022, I believe. October 2022, October 2022, that would be right here. So that's when we topped up here. So that would make sense. So we topped on the Dixie. That's when we bottomed on our risk on assets. And this whole move here was essentially not the whole move. Yeah. Well, no, right. Starting right here. Where's November 21? Right here. So starting right here, all the way up here, that was the bear market. Bear market. The bear trend, as I like to call it. Not going to be cheaper to borrow money until 10-year treasury yields come back down for consumers. Yeah, those 10-year treasury yields. Let's go ahead and 10-year treasury yields. Are these going to be coming back down? Because that looks like a V-shaped recovery breakout. Oh man. Yeah, I don't know. This is on a monthly time frame too. 10-year treasury sitting at 4.6% and looking strong. So that's not good. The higher the yield goes, the worse we're doing. See, this is when I need BC Port Corp to come in here and fill me in. Because something that I am very new to is the yields and the bonds and all that stuff. So I'll have to plan some stuff out, learn some stuff, and then come on here and teach it. Because that's what I like to do. But when it comes to the yields, I know that the higher it is, that means the more they're being sold off. So people are favoring shorter term yields because they're down? Are they down? Are we inverted? I think that's what that means. Oh, these are shooting up too. So our 2-year, what about a 3-year? 3 years up, 5 years up, 30-year up, 1 year is up. I mean, but these are moving down. I'm on a monthly time frame. I need to remember that. So the monthly is moving down on these shorter time frames, which means we're seeing more demand for our more short-term yields, meaning consumers aren't favoring or don't have a long-term outlook, a positive long-term outlook on the U.S. economy, at least on the 10-year, because they are not getting into 10-year bonds. In fact, they are selling them off. That's why the interest or the rate goes up. So that is to entice buyers to come in and buy the bonds so that the U.S. government can take that money, put it in the treasury, and use it for spending. But instead, we are seeing the bonds get sold off. Therefore, and more shorter term bonds are being favored, which is not good for long-term sustainability. That's my understanding. Well, I know credit card interest rate is dropping 1.5% on my card tomorrow. I was told that today. Da, 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 da. Random question. Rumor is Trudeau is resigning. What would be a good investment to capitalize on it, assuming the market sees it as bullish news? I don't know anything about Canada or their economy. Not sure on that one, bro. Not sure on that one. Defense contracting. I don't know. I don't know. Lumber. Look at the lumber. Huh? Let's look. Let's look at lumber. Lumber. Credit cards are based on 10-year yields, probably 6 month and 1 year. I think Trump said that he wants to cap interest rates on credit cards. I don't know if he can or should do that. I just know that that's a thing apparently. So let's see, lumber. Do we have Canadian lumber in here? Oh God, here we go, Gary. We got Gary in here again. Gary. Let's look at this. Let's look at this S coin. Let's take a look at it. Oh no! It continues to rug pull. Just continues to rug pull. Look at that. Look at that. Equal lows down here. Look at that. It might push higher to suck in more people, so that whoever owns the most of it can get rid of theirs, because this was a clear rug pull, and everybody that ever comes up in the chat to shill it is probably somebody that round tripped some bags, or they're bots, one of the two, and they're just trying to get rid of it. Of course, when you come into a chat saying Gary bullish mode on, it is almost always a scammer. So, would be nicer than 30%. LOL, yep, cap to 10%. Yeah, would be nicer than 30%. Yeah, that's true. Cap at 10%. Bullish on Gary. Of course, Retro Mike Tech has to be a troll. Let's take a look at our Russell 2000. Getting a nice bearish start to the week, I see. Let's go to the daily. Pulling down a little bit. So we will look at the Russell 2000 because the Russell is 2,000 low cap companies, public companies that are traded on the US stock market. So when this is more bullish, macro, that means we're more bullish on our risk on assets. So we want to make sure. So we want to watch this and see if it is showing us some bullishness as well. So if the Russell is bullish, then more than likely our riskier assets like crypto will be bullish as well. So, but as it stands right now, looks like it put in this fair value gap right here on the daily, kind of digging into it, but failing to get above this 786. So as long as that continues to struggle, that could mean that we will continue to struggle in crypto as well. So just a little bit more on the bearish stuff. Now, don't forget, we can take a look. I don't know why I don't have this up already, but we can go ahead and take a look at the Chart Prime Oscillator Pro Plus. Don't forget to check out Chart Prime yourself. Link in the description down below. Get 45% off your first month. What is this? Let's reset these settings. Take a look. This is what it looks like when you get the indicator. So we can see we did get a reversal signal right here on the RTY, but our money flow is still pretty thick in the red on our Russell 2000. So yeah, I don't know. We might see, like I was saying about Bitcoin and crypto, we might see a beginning of the week move to the upside, but that could be fake news. Fake news. Okay, because we could see those roll over once we start getting the jobs data out, employment data out that could potentially be negative. Show me the chart, I'll tell you the news. If I was to go based off of the chart, I would say the most likely scenario would be that we're not going to get good news because I am generally feeling kind of bearish on the charts. So that means that the labor market is probably not looking too good. Although I do think it's a little bit of a mixed bag. I still think that we are still we're kind of in uncertainty land, which just means more likely than not more chop sideways, especially for Bitcoin and maybe even Ethereum. I think 2025 is going to be pretty bullish for Ethereum and layer twos. Because 2024 was kind of the year of Bitcoin's big breakout for the ETFs and all that stuff. ETH never did gain traction or gain enough traction to break its old all-time high. So I think 2025 is ETH's year. You don't think the job market is going to be bearish? We'll see. Now, just because the data may not be bearish doesn't mean that the price action might not be bearish. So, what the market could do is it could take that news and say, "Oh, this everything looks good," but then people might overestimate what that means for the Fed. They might think that the Fed is going to cut rates. Even more during the first meeting, which I still kind of doubt at this point. Labor market is going to miraculously be stronger. Miraculously. So you're saying that it's going to be fake news? We'll see, man. We'll see. It's possible. Now, a lot of this data coming out this week is going to be based off of last month. I think maybe all of it is. So that does mean that we have end of the year stuff going on. So we could see end of the year layoffs, stuff like that. The housing market is not dead. They are building 6,000 houses up the road from us. Hey, man, I'm just saying. I'm just telling you what the charts are telling me. That doesn't mean that. I mean, I can be wrong. I've been wrong before. And you know what? I'd be happy to be wrong because that would mean breakout on assets or portfolio, right? Good for the portfolio. Now, the total 2 is looking good. This is all of crypto, excluding Bitcoin. Our money flow is coming down, though. That's not looking good. We need this to start to turn back to the upside. And our volume matrix is also thick in the red. So we need those to start turning around. I did see this break coming in and then probably consolidation sideways, some type of correction in here before it heads back, before it starts moving to the upside again. So this is what I would be potentially looking for on the total 2. This is our altcoins. Essentially, I'm kind of just bearish for the first half of January and then for January, maybe even a little bit of February, and then we can start to turn things around. We'll just have to see. I say bearish, but it's more just like, I mean, we could be getting some corrections. Let's go ahead and take a look at ETH. So ETH is coming into, so yeah, we do have a little bit of a bear flag here. We've got this daily order block that I have blocked off here. We also have a daily fair value gap sitting right here that we are getting into or close to getting into right now. So we do have some confluence here. I can go ahead and pull a fib from this high to this low. We also have the 702 sitting right here and the 786 sitting up here and the 886 sitting right up here at this a midpoint, essentially a little higher than the midpoint of the order block sitting up there. So a lot of confluence up there for potential resistance. Also, if we are to continue to push higher up here, then we will see our oscillators start to get a little bit overextended as we are getting up into these zones. These are just areas where I would just be cautious. And yeah, let's just say I'm not going long up in these boxes, okay? If we start seeing weakness in these boxes, if we start getting bad data on our economic front, on our labor, then, you know, we can see downside. Don't fight it, just accept it, let it be. It'll be okay. It'll be all right. Because in the grand scheme of things, it's nothing but a pullback before we continue higher. So, I mean, it's the same thing that I have for Bitcoin. If I go ahead and just come over here, click this. Ooh, I do have a new favorite chart prime indicator. It is free. It is a free indicator. By Wednesday, we should be going up. Okay. Okay, it's possible. This does look kind of bullish here on the weekly chart for Bitcoin. So, yeah. I mean, that's actually looks pretty. Pretty. My only problem is, maybe not. Is it there? Got a little bit of a gap here. I don't know if I would count that. But we could see that push up here. Could be looking something like this, where we get that push up and then another move to the downside. So, I mean, maybe we do come up here and take out the this high, the December high. That is, I mean, it is always potential. My thing is we do have a monthly fair value gap right here, and we did have a December consolidation candle here on the monthly, and we have not gone down into this fair value gap at all. The midpoint on this fair value gap is also a number that keeps coming up around 82,000. Just below that, a sweep of that would be that 77 I was talking about earlier in the stream. That doesn't mean that I would be watching the midpoint of this wick, of this monthly wick, which, let's go ahead, take this, put this on premium discount. 102,418. If we can get a weekly close above 102,418, then I would consider that we will be going higher. But we need to get that weekly close above that. Let's go down to the weekly. There we go. Let's go down to the daily. Let's see where's that midpoint. Look at that. Daily fair value gap. I'm not saying, I'm just saying. I'm not saying it's going to be bearish. I'm just saying don't be surprised if it is. Let's go ahead and take this whole range, see what we're looking at. All right, so we are coming up on a value area high. There's not a lot of volume up here in general. So let's go ahead and break that value area high. Let's break it, get above it, and consolidate above it. And then I'll be feeling a little bit better about all of this in general, especially if we get good economic data, which you guys seem to think that we will be getting. So maybe we will. We do have a daily fair value gap sitting below us down here between 94,950. Let me see. Move this. The high here was 94,951, and the low here was 96,042. And we have right in the middle of that is this point of control at about 95,500. So if we fail to close above this value area high, then I would see us come back down to this point of control at the very least. Let's go ahead and throw up the TR main. We can see that we did get a bounce off of our 50-day EMA. Let's go out to the weekly. Did we get any key bounces here on our weekly chart? Let's get rid of this. We got a lot of vector candles in here too. So that's market makers showing their hand. We've got the 50 weekly creeping up below us. Looks like we lost the 5-week. We do have the 15-week still below us though. So that's okay. We can lose the 5-week and still be okay. Didn't lose it there. When I say lose it, I mean close below it. That led to some consolidation there. Also, we did have 3 consecutive days of high or lower highs and lower lows, which, let's come over here, has been a signal, particularly at the top of moves. So after we've put in a top, if we put in 3 straight days of lower highs, so right here, lower high, lower low, lower high, lower low, lower high, lower low. That typically signals that we are about to go into a bearish or consolidation phase, which that means this would just be the beginning of this move, and that we could be seeing further downside. Let's come over here. Let's see the last time. So when we put in a high back here before this 6-month range that we put in, we got a high, let's see, there's our high. So we got a high, a lower high, or this is the lower high, lower low, lower high, lower low, lower high, lower low, and then that led to all of this. So 3 days down on 3 lower highs, 3 lower lows, as far as the high of the day and the low of the day. So that's what you want to look for when you're looking for those 3 highs and 3 low moves. And we can also think of the same for on the bullish end. If we get 3 days of higher highs and higher lows, then we should be seeing more bullish price action, because that's just showing that buyers are stepping in and they're bringing up or bringing down that floor or that ceiling, and that just shows who is in control of the market. Right now, it's Chop City, so we'll see. I did have a pretty nice looking trade set up here on SUI that did end up playing out, but there we go. So this looked good. This might be putting in a high over here, but yeah, man. Break of that, come down, consolidate on top of it, push higher. I mean, what a breakout there. Beautiful move there on SUI. Heat map. Let's take a look at the heat map. I mean, we could take a look at the heat map. What time is it? All right. We're doing it. We're doing it live. Take a look at the heat map. We'll go to the coin glass heat map. Or are you talking about a different type of heat map? I think you're talking about liquidity. Liquidity. Here's our liquidation heat map. Come on, come on, come on. Gap at 93K. Yeah. Taking forever to load. Yeah, I know you meant the liquidity, RS Miller. Why are you taking forever? I know it's because I'm streaming, but still. Should not take this long. Oh, let's see. While that loads, let's go back to the Bitcoin chart. If it'll load. I do have chart prime liquidations. So this shows liquidity coming all the way down. Look how thick it gets down here at that 50K level. I don't think we're going to be going anywhere near that anytime soon anyway. Probably not. Probably not on that one. Let's go to let's go to the Binance chart. Because I do want to show you guys that that new free chart prime indicator that I think you guys should check out. Well, I got a lot of drawings on here. Let's get rid of them. Hold on, let's look at them first. What do I have drawn up on here? Not quite, not quite. Let's get rid of this. Looks like a Head and Shoulders there. Maybe. All right, so let's go back over to, we'll look at the indicator in just a second. Let's go back over to this. Hello? Are you serious right now? You still haven't loaded? What's wrong with you? I'm bearish, BTC short position. I'm currently in a long. Short-term long. Start of the week, long. And then after that, short. Probably. It all depends on what we do once we start getting into that daily fair value gap and those order blocks. So we do have liquidity resting below us. Let me get rid of, well, let me see. Chat box. Let's move you over here, this guy. So we do have this liquidity sitting right over here. Let's go ahead and take a zoomed out look. Let's go to the weekly. Whoa! That's a lot of liquidity. My goodness. Let's go to the monthly. Okay, so the big bright spots are sitting above us right here. We have $158, $58 million worth of liquidity sitting up here at, it's not going to give me $100,396. I'm not seeing much below us on the monthly. We're probably going to have to go to a 6-month time frame. Let's take a look. Wait. There we go. Oh, hurry up and load. I gotta go. All right, so the liquidity just absolutely stops right here. Yeah, I don't know, man. I mean, there's definitely more liquidity below us than above us. No major bright spots on here. Let's go to the Model 2. Hello. Model 2, check out Model 2, see what it's showing on the liquidity heat map. And then after that, I do want to look up something else. Okay, so yeah, we're seeing a lot more bright spots on this one. Down here, 96, 97. You can see a little bit of a picking up around here, down here in the lower 90s. Zoom in a little bit right here. Look at that, 13 mil, 10 mil, 13 mil. Maybe we'll get that little push up this week, like I've been saying, and then roll over and start taking some of this downside liquidity. Maybe. That's, I'm just saying maybe. Don't shoot the messenger. I'm just here to give you my opinion. I'm sorry if you don't like it. Thank you. Move me back. Thank you, me. Thank you, me. Velo.xyz. So I want to take a look at the Velo chart so we can take a look at the open interest and some spot volume and see where we're looking at, how we're looking on that, and some perp volume as well. That matches down to 97,000 and then up. Yep. So I do love this site because you also have a Santa hat on here. Time to update. 3-month annualized basis. Not looking good. Whoa. Hello. Okay. BTC price moving to the upside. BTC volume moving to the downside. We need some volume to start coming back. That's for sure. Liquidations have been picking up a little bit because, of course, we started to move to the upside. Let's go ahead and take a look at the chart. Bring the chart up. Chart it. Chart me. Chart me. Hurry up. We're almost over, guys. We're almost over. I just want to look at this last chart, and then we'll wrap it up. If it even wants to load up on me. Come on. Okay, let's see. Oh, man. I don't like that at all. All right, so this is not good. Unless this is shorts being put in here, which our delta is positive, so not likely. Ooh, but that's also spot delta. Spot and perp. And then it starts to fade. Yeah, I'd be very careful. So the open interest has been moving to the upside, which means we're seeing more leverage players start to step in, which is most of the time not a good thing, because if price is moving to the upside and you have your leverage positions opening up and starting to push to the upside, that could indicate that we are getting a lot of longs to put into the market, which means we start putting in stop losses. Stop losses start getting put into the market as you move to the upside, and that is just liquidity getting built up for the market maker to come back down and take once it gets built up. So the mark price up, engineer liquidity into the market, aka meaning get people to come in and buy. People put in a little too much leverage, they over leverage themselves, and then they get wiped out. Or the good scenario would be that this is shorts piling in, and that we could start seeing a little bit of a push to the upside for a short squeeze. Now, what would indicate a short squeeze to us is if we start getting past some of these highs over here, and we start seeing the open interest start to trend to the downside or putting in red candles, indicating that it is shorts that are getting liquidated as price is moving up. Because as price is moving up, then we expect for leveraged shorts to start getting covered or called or liquidated as price starts moving to the upside, meaning our open interest will start pushing to the downside. Both because we see our longs taking profits and our shorts getting liquidated. So yeah, that is something to watch. We can see the last time we got up into this range here. We did have a little bit of a pullback, not a whole lot. Got to move to the upside here. Price or our open interest started pushing to the downside. Yeah, I don't know. We have had 4 days to build that. To build what? I'm not sure what you mean. To build up this liquidity? Yep. I think it's been a little more than 4 days, but yeah. We'll have even more, a whole week of liquidity. Then we could see if that open interest really starts to come up. We can see this nice big liquidation event here. That was this right here. So this is when longs got liquidated. Price shot to the upside as this was moving to the upside, and then we see it start to move down and longs get liquidated. And that gave us our down move on our open interest. But we aren't really sitting too terribly high on our open interest. So this is going to be a level to watch right around here. Where my tools go. Of course I right click. Yeah, I want to watch. I mean, this is the level where we start to see some rough price action. So we want to be cautious once our open interest starts piercing right there at about 208,000. So be careful this week, guys. I do think it's going to be a pretty volatile week because of all the economic data that is coming in. And yeah, we'll see what we get. Watch Monday is typically the false move. Typically, not always. It's typically the false move. So if we are moving up today, later today, throughout the day, tomorrow, and we start getting close to our resistance levels, and then we have the data, the economic data coming in on Tuesday, Wednesday, Thursday, and Friday, we just need to be cautious, okay? So that's why there's big caution on the thumbnail. We just need to be cautious as we are approaching highs at the same time as we are coming in with economic data. So I'm just saying, be cautious this week. We could be very volatile. And yeah. 1 second. Let's go back over to the chart real quick because I did want to go over that indicator. This is called market structure TT. I forget what the TT stands for. But this thing is pretty cool. Pretty cool. This is a trailing stop. This is a buy signal. It has a short signal on it as well, with red arrows. Let's go down to a shorter term time frame. I'll go down to the 5 minute. What I've been doing with this is I've just been going back and I've been looking at my kill zones. So these are certain hours within the market and seeing where we are with this once we leave the kill zones. So this says that we are bullish. We come down into that trailing stop, and then from there I would consider potentially going long because we are deviating outside of the trailing stop, but then we push back above it, and then we can see that we go up to take out the previous highs to our left. Coming out of the Asia session, we can see that we do get a bullish buy here, but we do go sideways, and not a whole lot happens there. We fall through on that one. Now this is on the 5 minutes, very low time frame, so it's going to be a lot more misses than hits with this indicator. Now we can start going to the higher time frames, and we can start seeing just how powerful this thing is. We get the buy signal here. We always wait for pullbacks. No matter what indicator you are using, if it gives you a buy or sell signal, you always look for a retrace or a pullback, whether you're bullish or bearish. So in this instance, we break this high over here. I am already automatically assuming that I am looking for a pullback of some kind. This provides it to us after we get the buy signal. We stay above the trailing stop. If we can get in here, let's see, let's pull a fib from high to low. Let's just get in here in the discount zone. So that would be below the 50. If I can go up in here, and I can go ahead and place this on my standard fib, we can see it comes right down to the 786. So that would have been a beautiful entry, and then that whole time you're just riding this thing to the upside, and it doesn't even break here, but it gives you a bearish little break here, bearish signal here, to which we start looking for a rejection of some kind. But this is on the hourly, so again, shorter term time frame, and it just broke bullish. We'll have to see if that sticks around. Bit innuendo. Hola, French, como te va, compa? What? Como t'appelles tu? What's your thoughts on BTC miners on forum? I think you should mine your own Bitcoin. That's what I think. I haven't even been looking at the miners. Wow, not looking too shabby. Well, actually looking pretty terrible. Let's go to the weekly. Looking at the clean spark chart. Let's turn off the ICT kill zones. Take that stuff off so we can actually see what we're looking at here. Oh, I don't have the chart up. Take a look-see at what we're looking at here. Como si va man Amy? Como sa va man Ami? I don't know. I don't know. Hola, French Toaster. What's going on, my guy? How are you doing? Hope you are doing just swell. Man, this is just choppy garbage. I'd say, I don't know. Nope. I don't like it. I would just buy it and just hold it. I don't know. Maybe. Not financial advice. Anyways, I do gotta go, guys. I've already overstayed my visa. So, man, what a wild start to 2025. I don't know if you guys have been seeing all the craziness that's been going on in the US, and with a certain podcast, with some certain emails pertaining the Cybertruck driver and gravitic propulsion and stuff like this. Okay, all right. We'll see what kind of psyop they're trying to lead us towards next. But for now, let's just stick with the charts and stick with trading and not think about all that stuff and just be prepared for anything and everything. Um, can you take a look at BTC dominance? Bit innuendo. You're so late. You're so late. BTC dominance. I see it. It looks not good. It came up to, let's put a 702 retracement on here. 0.702. Change that to a bright green. Yeah. I mean, it came in between the 702 and the 786. Pullback. It's not really a pullback. That's more of a rejection on a, this is more of a, what do you call it? A retrace. And then a rejection off of retracement levels typically means we will see lower. Yeah, we could see, well, I don't know. We could see a short-term move to the upside, especially if, as Bitcoin pulls back, if Bitcoin pulls back dramatically, then it will definitely take dominance away from alts. But I don't know, man. This thing came back up to 60 again. Did it hit it again? The high was 59.92 and then pushed away from it. So yeah, I don't know. I mean, it does have some kind of life to it, but we're sitting below the 50 on our daily RSI primed, sitting below the zero line, money flow coming out on the Bitcoin dominance. And I don't know if this thing actually, if that means anything on the Bitcoin dominance, but yeah, I'd be looking more at our USDT dominance. The more of this moves to the downside, the better. We want to see this break these lows and start moving to the downside, because that means people are taking their money out of USDT and putting it in assets. But this looks like it is starting to tick to the upside on our money flow. And we could be bottoming out here soon. We'll see. We'll see. I think this week is going to tell us a lot. So let's just pay attention to our economic data. Let's come back here tomorrow morning for Good Morning Crypto with BC Port Corp, and then the morning market report with Piper and the OC guy, because both those shows go really heavy into economic data, fundamental analysis, stuff like that, and by very knowledgeable guys in those in that area of these markets of finance and all that stuff. A lot of that stuff is new to me, whereas I'm more just, let me look at the charts. I just want to see the charts. But yeah, that's gonna be it, guys. Come back tomorrow night, or don't forget also T.I. Joe tomorrow at 4 p.m. Eastern Standard Time, and also Crypto Nightcap with Tradefly and FDY at 8 p.m. Eastern Standard Time, and then right back here for Markets After Dark tomorrow night. It'll be TA Tuesday, so more charting, of course. Maybe we'll get into a little bit of strategy here. And yeah, I think that's it. So thank you all for joining me. I hope if you took something from this, please hit that like button on your way out. If you're a new and you enjoyed the stream, please consider hitting that subscribe. If you didn't enjoy this stream, come back tomorrow on the channel and see if you enjoy one of the other 4 streams. Maybe you will. We have a great team here at the Piper Academy Network. So yeah, if you're new, just hit that subscribe and hit that like button on your way out. And I'll see you guys tomorrow night. I hope you all have an amazing, beautiful, wonderful, radical sleep. And I'll see you then. Peace out.
Welcome to the night where we light up the spark. We're trading crypto, find out who we mad on the charts. Hosted by the one, Lunar Beaches top shark. Dive deep into the numbers cause this ain't no lark. We're crunching all the data, making money moves fast. From Wall Street to the blockchain, making predictions last. Community together in this financial blast. Markets after dollar shatter ceilings made of glass. Mad on the charts with Lunar's bright lights. Crypto markets soaring through the night. Follow the trends, see future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you to the mother lode. Economic loops and the way the dollar flows. Community vibes where everybody grows. Analyzing trends while the world lays low. Markets after dark where only brilliant shows. Hit that subscribe and join the ride. In the world of finance where fortunes collide. Lunar's path will be your guide. Through the market storm or the market tide. On the charts with Lunar's bright light. Crypto markets soaring through the night. From Bitcoin markets soaring fast. Markets after dollar shatter ceilings made of glass. Mad on the charts with Lunar's bright light. Crypto markets soaring through the night. Follow the trends, see the future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you to the mother lode. Economic loops and the way the dollar flows. Community vibes where